Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the NASDAQ Composite Index. Got the weekly chart up here. After a nice strong breakout past the top end cloud chart resistance level here at 13,000, the index then entered a new bull market based on the Ichimoku. Any price action above the top end of the cloud here is bullish. Price action below the cloud is bearish, but so far so good. Very strong performance, getting closer to key resistance levels. Broke past the 14,000 and now very close to 14,303, 14,387 and 14,575. These are the upside resistance targets in the current rally. Now if these resistance levels hold, there's consolidation risk back down to the front end cloud support levels that can retest these 13,404 and 13,000 levels as well, in view of potential seasonal weakness between September and the October low. So it's quite possible for the market to test these resistance levels and then pull back to consolidate back down to the front end of the cloud. So it could come back down to these levels and then move from there. But price action still bullish with consolidation risk, a consolidation move digesting this rally. 30%, 8% Fibonacci retracement will bring us back down to about 13,000 with downside risk to 12,364 in a very strong weak seasonal period. So those are the downside risk targets. Upside risk target, resistance targets are this cluster of resistance from these old cloud chart levels here. So they remain significant resistance zones for the market to get past. Now turning to the daily, a very strong rally after the cloud cross here back in January. Confirmed another new bull market on the daily. Kept on moving higher. Now a little bit extended from the top end of the cloud. You can see the price action is quite far away from the cloud. We need some form of a consolidation. If it's tested, these resistance levels can come back to retest this high there, 13,899 there roughly. So it can come back to test the standard line and the turning line of the cloud there, as well as significant weakness on a seasonal basis to the front end of the top end of the cloud. So these are the downside risk targets if this resistance zone here holds on the daily. But so far so good. Still bullish with consolidation risk back down to key support levels, front end cloud chart support levels. Turning line and the standard line, these are all downside support targets, 13,899 and 13,660 for the standard line of the cloud. So keep those downside risk levels in mind if these resistance levels hold here to the upside. Turning to the 4-hour Ichimoku, there we can see a little bit extended from the top end of the cloud. Note how that resistance zone, very close to that resistance zone. Investors anticipating this to be a significant resistance zone. Downside consolidation risk to the turning line of the cloud, 13,937. And then in a weak market, you could see 13,800 tested easily, as well as the front end of the cloud here, 13,660. Those are the downside risk targets if we get a consolidation, providing this upside resistance level proves too much for the market to break past. So these are the upside resistance targets on the 4-hour with downside support targets for potential swing trades. If we get these levels to be tested, we can swing trade them back to the upside in the index. If we just take a little bit from a risk managed perspective, what the performance has been like for the equal weighted NASDAQ 100 index, you can see a very strong performance in the large cap tech players, really since March been motoring the rally ahead and leaving the equal weighted index a little bit behind. But so far you can see the rally is really concentrated in the top large cap tech names. And the NASDAQ index did follow through with some good performance, driven largely by the tech-heavy names. And if we compare that to the S&P and the S&P equal weighted index, it gives a second to reload. You can see here how the performance here equal weight is actually somewhat lagging here. So the strength is really the last couple of months been in the large cap tech plays, and that also brings risk in the coming earnings season. But so far so good. Price action above the clouds are bullish overall, but be aware that the rally is concentrated in a few large cap tech players, and that might give us some risk going into the third and fourth quarter in terms of earnings outlook, etc. Until next time, happy cloud chart trading. Bye for now.